Hello ladies and gentlemen, this is also Senior Trading Manager with GDM with today's session outlook. Firstly, we're going to start with the most important events today. We're looking also at the pull away from the 4.5-month low of the US dollar. Also, we're looking at the UK government triggering Article 50 to, of course, walk out of the European Union. And, of course, some of the Bank of England's interest rate settlers, like Ian McCafferty, that actually highlighted that a weak outlook for the economy that came out on Tuesday, and of course the increasing borrowing costs that are expected to probably happen in May, he might not vote for it. Also, we're looking at a strengthening U.S. economy. The dollar, of course, retraced to most of the major currencies on Wednesday, and that was mostly on solid data and expectations for more interest rate hikes this year, while, of course, as you already know, sterling was not backed by the UK government's Article 50. Today, some more fundamentals. We're looking at a consumer credit change for UK, also mortgage approvals. We're also looking at the Donald Tusk speech later today, pending home sales for US, and of course the Energy Information Administration's crude oil stock change later in the day. And of course, throughout the Asian session, we're looking at foreign investments for Japan, which is also important for the Japanese yen. Let's have a look at the charts here and see what the markets are doing today. And the euro versus the dollar, we're looking at a decline below the 200 exponential moving average, as the dollar is strengthening on more rate hike expectations, also on some solid US data from yesterday. Today we're also expecting some more data, as I mentioned, out of the US and the European Union. For France, we're expecting the wage inflation and business confidence, of course, ahead of the elections later this year. Now, British pound is also lower, below the 200 exponential moving average against the US dollar. We're looking at a solid support at 124. However, further decline towards 123.55 could also be expected in the near term, as the British government is triggering today Article 50. US dollar against the Japanese yen, slightly retracing above the 111 area. As we mentioned in our previous market assessment, the 110 yen pivot point level have sustained its support, and as we know, it's a major level, 110. And the bounce back above the 50 exponential moving average have settled the currency pair between the channel of the 50 and the 200 exponential moving average. Gold prices have also eased below the 50 exponential moving average. This also some parts of the upward direction were actually halted for now. However, the upward trend is still valid, as we can see on the 4-hour chart. The 50 exponential moving average, or the so-called 1, 2, 3 pattern, have already fulfilled. Now we're looking at a continuous sideways direction, probably some test of the 50 exponential here failed to sustain the solid ground of the 50 exponential moving average. We're looking at a fall to 12.35 first, and then 12.30 afterwards. However, our main focus remains to the upside in the mid to long term on gold prices. Oil, however, have broken above the 200 exponential moving average. Right now it's trading just below the 49 area, and we're also looking at a continuing upside based on the American Petroleum Institute's last data that was in yesterday's session. We saw that the American Petroleum Institute came out with 1.8 million barrels of built. That was far lower than the previous week. However, today later into the session, we're expecting the Energy Information Administration to tell us exactly what the actual report is. Right now, the expectations are again for 1.2 million barrels against 4.9 million barrels, almost 5 million barrels in last week. So it really depends on today's report to settle the next direction of crude prices. So, of course, stick up to the economic calendar. It's a lot of important news today, and of course, I'm going to keep you up to date again tomorrow when it's going to be our next morning outlook. Right now, please like or subscribe, and I'll see you again tomorrow. Thank you for watching.